Hey traders, what's good and welcome to another episode on this channel. With SignalX, I'm hoping to bring some of the coolest TradingView indicators, strategies, backtests to you out there with a focus on FX. And in this first video on this channel, we actually have an indicator that I think is super interesting for any kind of mean reversion strategy that you are using, and works extremely well on some of the currency pairs such as the US dollar, Japanese yen. So I'll explain in this video, I'll explain you how the indicator works, how you can set it up, how you can trade it, and I'll give you also some of my personal experience using this indicator in my day trading. So without further ado, let's jump right in. You can see here I've pulled up the US dollar, Japanese yen chart, 15-minute chart. And we are seeing high Kanashi candles just to show the trend a bit better. And all you got to do to start using this indicator is you go to the indicator section and then you look for the mean reversion channel, Farid's MRI variant. It's the one with 7.4K stars on TradingView. You click on it and it will pull up that strategy. Before we look at it, let's actually have a look at the documentation on it. So basically, why is this so cool, right? So it's basically a classical mean reversion strategy setup that, has the assumption that prices, especially for certain currency pairs, will always snap back to the average price over time, right? So you can see the green line, the yellow line here is the mean price, and you can see that in case, for this currency, when it got overextended into the strong oversold or oversold area, it snapped back to the mean. And likewise, if it gets overextended into the overbought area, it also tends to snap back to the mean. Now, this doesn't always happen, right? Some currencies are not mean reverting, or you're not in a market where that behavior is currently present. In that scenario, don't use that indicator, obviously, right? But if you realize that a currency is behaving in a way that, prices are always snapping back to this mean line, then this indicator can become extremely valuable. So understand the market regime that you're currently in. Are you in a trending market? Are you in a mean reverting market? And if you are in the latter, then you can use this one. And then it works quite well, right? So why is it better than just using Bollinger Bands or some other channel indicator? Well, it has something that the others don't, and that is multi-time frame analysis. You can see here that on the right side you've got this little call out, and it tells you what the price is doing relative to the mean price on different time frames. So right now we're looking here at the daily candles, yeah. And currently the price is below the mean and it's minus 1.9% away from the mean. And if we look at the weekly time frame or the monthly time frame, you also get, an indication of what the price is doing relative to the mean. Now, why is this so important? Well, because you can have different situations. So you can have, for example, the price can be above the mean on the weekly time frame, but it can be below the mean on the 15-minute time frame, and you don't want to trade, or you want to take that into consideration when you take your trade. So basically what you have is these three areas: overbought, strong overbought, overbought, weak overbought, strong oversold, oversold, weak oversold. And then you always have this yellow line as the mean price, and you can take your trade based on your understanding of what the market is in currently, and also your understanding of, have we extended strong enough into one direction, and is it likely to see a snapback? So let's close this and let's look at what it looks like on TradingView. So we've set it up here, and you can basically now see that that is our indicator. Let me move back so we can see the current situation. You see here the price is currently super extended in the overbought area, so we are actually due for a reversal. under the assumption that this currency is currently trading not in a trending but in a range bound market, which I don't think it is, but still. If you click on this little multi-time frame analysis, you can see we're currently in the 15-minute time frame, and it gives us the 60, so the hourly and the 4-hour time frame. And it gives us also the status, right? Overbought, weak, strong, and so on. And if you look at some of the past situations where it was, like for example here, we entered the oversold area and we saw a reversal back to the mean. Didn't always happen. Right here you see that the price continued to go down, but it wasn't really overextended too much, right? You want to look for a situation where it is very clear. So something like this, right? We're hitting the oversold and then it reverts back to the mean. We're hitting the overbought. Up here, it reverts back to the mean price. Slightly overbought, reverts back to the mean price, right? So you need to have a professional judgment when you trade with this indicator, because sometimes it fakes out. But here is another good one. Overbought, even strongly overbought, reverts back to the mean. And if we take this one as an example, so let's assume you wanted to go short in this instance. Yeah, you would have probably entered your short maybe here. The first confirmation that there is a trend reversal could have been, for example, if you combined Heikin-Ashi candles with this system. Here's the first Heikin-Ashi candle where we did not have a wick. And then what we could have done is we could have set the stop loss maybe here at the high of that candle, and then our take profit roughly at the mean price. And this would have given us a beautiful 3.3 risk-reward ratio trade, which was taking this mean reversion into consideration, was looking at trend confirmation in the form of Heikin-Ashi candles. You don't have to do this, right? It's not part of this video, but that's how I like to set up my signals, that I don't only look at what is the price doing in terms of is it overextended or is it overbought or oversold, but I also look for momentum confirmation. And in this case, this would have been a good setup, right? You would have been in the green here, you would have slightly, I think, been in the red over here, but then prices did revert quite heavily back to the mean. So that's basically how this works. You can obviously also set up alerts for this, right? If you have your alerts in TradingView. So for example, if your price enters one of those overbought or oversold areas, you get an alert. But my recommendation and how I've been trading this and how I see it work best is if you first look at what is the market doing. For example, if we look at currently what prices are doing, you can see that the market is strongly trending right now, especially since last week Friday. So it is overdue for a correction, right? But I wouldn't enter into a trade here because I don't see any kind of confirmation that momentum is shifting. So this would be a waiting game. It might be a really nice setup for a reversal, but you would have to see first, some sort of like momentum shift, something happening that gives you more confidence, more conviction that this trade is actually moving in your direction. Yeah, let me know what you think of this indicator, whether you've used it, whether you would consider using it. Like I said, I didn't develop this, so all credits go to the original creator. But I think it combines, it's one of the better, mean reversion indicators out there in TradingView. And, especially if you combine it with things like Heikin-Ashi candles, or maybe a moving average, or maybe something like the rate of change, to give you that needed confirmation that things are actually moving away from overbought into, back to the mean, then it can become a really powerful tool. With that said, I think, yeah, that's all I wanted to show you on that front. You can use it for free, obviously. Just open up TradingView, look it up, backtest it before you take real trades. And yeah, looking forward to seeing you in the next video. Until then, take care, bye-bye.